All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, July 11, 2022. If you're not done so already, give the video a thumbs up, subscribe to the channel, comment, etc. Or come find me on carnivoretrades.com for swing trading alerts and analysis. By the way, another winner today, taken today on Boyle. That is a nat gas play. And we've traded nat gas several times over the last year and been successful every time. Took another 10.6% on this one. So a nice pop there. You see nat gas gapping up this morning before fading off the highs. We dumped it in the morning and got a pretty nice exit on that. So in any case, if you're interested in that, come find me on Carnivore Trades. Anyways, back to the markets here. So really it was all about the dollar index today. If you take a look on the intraday of the dollar here, you can see pretty much traded inverse to the spider. So we went up here, we faded back down, and in the morning we had this little dip here in the spiders, and then we just kind of got stuck in this range, started to dip up, dollar dipped down. It was really just kind of an inverse relationship, and right now the market is really focused, hyper focused on the dollar index, and it's getting close to parity on the euro, so that is something to consider here as well. The other story of the day here is really just OPEX burning. This is what, I said this to the members in the forum earlier this morning, and I said, I wouldn't be surprised if today and tomorrow we kind of just go sideways and don't really do anything, because we have CPI data Wednesday. We have, Delta and Fastenal reporting Wednesday, not really that big, but the banks reporting Thursday and Friday. So market's really just waiting on CPI and it's waiting on bank earnings. So there's no real reason for the market to do a whole lot here other than trade sideways and just burn out option premium. It is an OPEX week after all, so that is to be expected. You can take a look here. We gapped down one little 1-2 flush candle, and then sideways they just pinned us down. Take a look at the diamond there. Triple Qs, they used Tesla to push the market lower. You can see it across the board. There's the Russell, gap down, little push, and then a little pin. So really just clear cut, old school option burning premium, typical of OPEX week. And again, there will be some pretty big moves this week, but I feel like this is kind of the calm before the storm today and tomorrow. Essentially, that's kind of what we're looking at right now. Now, there was a lot of... we had a very light volume day today, so 53 million shares traded. The markets have just closed, so this is including the last couple of blocks that go off after hours. So very light, and the market kind of, usually when you have light volume, you look for a neutral upside bias, and the market tried to rally in the afternoon, but did fade off the highs before getting a little bit of a bid here into the close. So nothing more than really just a pullback day. If you look at the daily time frame, still inside of this green bar here, and you still have higher lows in place, and you could be setting up for some type of bullish consolidation for a move higher. Again, we talked about the higher highs scenario. If we make a higher high, it'd really be the first time since March, so that is on the table as well. If we look at the triple Qs, again, nothing more than a pullback here. We dipped down and just backed off of this trend line, so we still have the higher low in place and technically a higher high as well. So triple Q is not really doing anything wrong. All I see right now is just backing and filling here on the daily time frame. And again, this is nothing really terrible here for the market, especially with the light volume. We've been talking about the chances of a summer rally. Well, with the volume very light, the chances of that increase, even if you have a pullback day here and there. But again, the CPI data is going to tell us a lot. The consensus seems to be that we'll have a little bit of a slowdown in consumer price, but a lot of that's expected. So bear that in mind. Either way, we don't really care about that. All we care about is the market's reaction to the news, and then we care about the market's reaction to bank earnings. So we'll see what we get later this week. Until then, may remain a little bit muted here. As far as some sectors here, let's go through them. So semis here, again, pullback candle off the 20 moving average, still inside of both of these green bars, near back above this white trend line, which goes back quite a while here. But again, just a little pullback candle on the semis. You do have a gap there. Maybe it gets filled. This has been a weaker sector. If we continue pulling back in the broad indices, this is a weaker sector, so it could fill that. I wouldn't rule that out. But overall, again, nothing more than just a pullback day here. IGV, same thing. Pulling back off of this trend line and really just kind of holding this kind of upper range. Nothing really wrong here with IGV. Looks like it's consolidating for a move up to that 300 handle. So nothing terrible there. We talked about XBI over the weekend, going into that weekly resistance level. So it had a nice run off the lows, but you went into this little tail candle and you couldn't break through it here. Couldn't break through it, couldn't break through it, couldn't break through it. Then you broke through it. So now that's going to be your resistance. Support comes resistance, remember. So right around that 84, 84.50 area. We tested that on Friday. And now we're getting a little pullback off of that with XBI. A little overbought in the short term, but you know, in all fairness, this was way oversold for quite a while. But in any case, again, pullback here across the board in the markets. Dow Transport's another weak sector. You know, again, still inside of this green bar. So, you know, we'll give it the benefit of the doubt for now, but it is weak. It's still below this trend line. You get above that, you know, then maybe you can get back up to this red area around 14,000, 14,200. There's going to be quite a bit of resistance up here, though, for the transport. So bear that in mind. Interest rates today did a little bit of pulling back. So we talked about the 1, 2, 3 surge. We said there was probably going to be a pullback today. There was, and we'll see if this ends up being a lower high. So had a nice little pop there off of that kind of almost gap fill. It almost filled the gap last week. Got a nice surge. So maybe a little bit more upside in the cards. Again, I'm still favoring a lower high here. And again, if that CPI data comes in anything other than hot, that could put pressure on yields and, you know, could give bonds a bid. So bear that in mind as well. Same thing with the 30-year, 1, 2, 3 up. Little pullback there. It did hold the 50-day moving average for what that is worth. HYG, again, the big area here is that 75 handle, but again, just like everything else, little pullback today, still inside of this green bar. So, you know, this could be flagging up for a move. So we'll keep that on the radar, but so far, just kind of a little inside day there for the HYG. Now, home builders, very interesting. So this has been a weak sector all year long, really, and it's actually had a nice pop off the lows. You made a higher low, higher high, and it's actually almost kind of consolidating bullish here. On the daily, you know, this is actually not doing anything terrible, just down 29 cents here on the XHB today. So down less than the market, and see the same thing on the ITB. So it's actually kind of outperforming on this little pullback. So home builders, you know, maybe signaling, you know, maybe it's just their oversold rally, or maybe they're signaling a move in bonds. Either way, definitely keep that on the radar for another move up here. Again, I think the move is limited, but I think they can have one last little leg up here. As far as the XHB and ITB are concerned, VNQ, again, nothing's really changed. Came down, you moved up, and now we could, you know, potentially be putting in a little A, B, C type up move. Again, a lot of resistance up in that 97, 98 area. So that's really kind of the max move I'm looking at there on the VNQ, but in the short term, it can catch a bit here. XLF, so on the financials, again, these guys have earnings later this week. You still have that inside bar on the daily, but again, it's in a weak technical position. If you take a look at JP Morgan today, and obviously they report later this week, but they had a nice pop in the morning, and it was actually outperforming the market as a whole until the afternoon. We started to roll over. So again, continued weakness in these financial names. Broker dealers are holding up a little bit better. You still have kind of a, you know, up move and kind of a sideways chop, so it could be setting up for kind of a bullish consolidation. Same thing with the XLF here, you know, up move. This is a bullish inside bar technically, even though it's below all the moving averages, which gives it a lower probability. It's still there, you know, it still has a move up, and if the market lifts up, or if these guys, you know, if the market reacts positively to earnings, they'll probably get some upside. I mean, that's really the bottom line here. But overall, again, just a pullback day there for XLF, and, you know, finishing slightly off the lows. As far as energy, so crude, and kind of just an inside hammer day. So this may want to go up and test that 108, 109 area. Again, that would coincide with this kind of opening level on this red bar. So that was 108.80 right there. And then the high would be your major level at 111.45. If you close above that, that would open the door for like quite a bit of upside in crude, in spot crude here in the near term. I don't expect that to happen. I do think it stalls out around 108, 109, and I think we make lower lows eventually. But overall, nice little inside hammer. So in the near term, maybe crude can get a bid. Same thing with XLE, XOP, and OIH. I'm still just kind of in the camp that these are all kind of backing and filling. Yeah, they can get a bid in the short term, but these all have a little lower to go. We talked about nat gas a little bit earlier. So it left this nasty gap here on the daily time frame, gapping up through the weekend. And that was one of the reasons why I wanted to get out of this and take profits. Went up into this 20 moving average, which, to be fair, was a minor moving average, but you hit this red bar high. And we've closed, we're now closing back inside of this red bar. So technically this is still a bearish inside bar. It's not the prettiest pattern, but it is still a bearish inside bar. And the fact that we came off the highs here, you could make a case this is a little bit of a test candle or a fake out bull trap, whatever you want to call it. And now we have this big fat gap here that's all the way down near $6. So that's 50 cents lower. It's a pretty big move here, and that can easily get filled tomorrow, as soon as tomorrow. So for me, looking at over 10% gain on Boyle, made sense to just take the profits and run there. No point in rolling the dice in this type of market. The markets had a little bit, the equities specifically have had a little bit less volatility over the last month, but this is still a turbulent market, and commodities especially are, they call nat gas the widowmaker for a reason. So you guys get the idea. In any case, I still think nat gas, maybe it has upside to 7, maybe this trend line here, but I do expect it to make a lower high just like crude, and I think the buy levels are a little bit lower. I do expect them to get down there, and I'll be playing this again at some point in the future. Anyways, dollar index, we touched on that earlier, very close to parity with the euro. We're very close to my 108.50 level, and it may even actually overshoot that at this point. I did a little bit more numbers crunching on this, and I still expect it to at least get to 108.50, but I think it can, when things go parabolic like this, take a look at the weekly, the monthly, sometimes they can overshoot. So don't just assume that, oh, Aaron said 108.50, so I'm going to short there. Don't assume it's just gonna reverse there. But dollar's strong, it's parabolic, it's extended, it's probably close to putting in some type of a blow-off move, but that doesn't mean you want to get in front of it just yet. It's possible that once we have parity with the euro, that could signal a pullback or a correction. So there's that on the table, but I'm not really ready to get in front of this right yet. If I do, it'll probably be with put options. So that way I'm kind of, mitigating my risk, and, I know exactly what my downside risk is. So, and committing less capital. But anyways, with the strong dollar, obviously gold, much lower today, down 64 basis points. So again, just kind of consolidating in this lower range. Could be setting up a bear flag here, so we'll see what we get. It is OPEX week, so anything can happen. And we saw nat gas, we just talked about, we saw this kind of attempted bear flag last week, and then that failed. So, we could get the same type of a setup here on gold. I wouldn't rule it out. It's a little strange that it hasn't bounced at all. Really at all. This has been total dead cat bounce, but overall, it's been weak. We'll see what it does here over the next couple of weeks, see what it does into OPEX, but again, it's on the softer side, as is silver, really consolidating near this 19 handle in the lower range, of this sell-off, and still now putting in a bearish inside bar. And on the daily, platinum did pull back a little bit as well, though I think platinum is in a much better position than gold and silver. And palladium also held up really well. A little inside hammer there, so nothing terrible. This could be setting up for a move higher, believe it or not. So palladium is in a lot better of a technical position. And then we have copper, which rolled over today, still held this green bar low by the close, but again, it's been absolutely slaughtered here. It's due for a technical bounce, but the buy level on copper is significantly lower, so I'll say that. But overall, it's just trying to hang in there for now. Anyways, Bitcoin. So we talked about Bitcoin. If you checked out the video yesterday, the crypto update, basically what I'm looking at, and I just added in this blue trend line here, so that marks 20,240. Spot 3.4, which is the low here, green bar low. Any daily close below that is going to be, a pretty negative sign here for Bitcoin. So I want to see it stay above that in the near term. And if that happens, you have a, a potential kind of micro bullish inside bar here, with potentially, a move up to maybe that 50 moving average around 25,000. So again, you got to get above this level here at 22,989, which is this red bar high. But for now, it's hanging in there. It pulled back with the market, but really the level I'm watching here is this blue trend line. Any daily chart close below that would spell trouble for the coins. All right, and then lastly here, we'll just cover the spiders really quick again. So basically just a pullback day, nothing really more to make out of it than that. Again, market feels to me like we're just burning out OPEX premium, burning out options premium, and waiting for CPI and bank earnings. So I wouldn't make too much out of today's action. Look at the light volume, 57 million shares traded, including after hours now. The triple Qs, Let's take a look there. Yeah, so very light volume there as well. 53 million shares on the triple Q. So again, not a lot of participation. Just looks like some backing and filling. And we'll obviously just let the market tell us a little bit more, and we'll see about that CPI data. Anyways, guys, take care. I'm going to wrap it up here. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.